Hi guys, I'm Will. In this video, we're going to answer the question, is your bank robbing you? What if I told you that every month, slowly, money is disappearing from your account? Well, it is. And the culprit is inflation. And most likely your bank is an accomplice by letting inflation steal the value of your purchasing power, and they aren't even doing anything about it. The good news is that at the end of this video, I'll share the way that I beat inflation and how you can too. By the way, I'm not a financial advisor, and this is not financial advice. I'm an investor and an entrepreneur who is sharing some tricks about how I get a higher return on my investments. So first, what is inflation? Inflation is when prices go up because of an increase in the money supply. In response to the global pandemic, the U.S. Federal Reserve printed money at historic levels to stimulate the economy and prevent an economic collapse. As a result, 1 out of every $4 in circulation was printed in the last 18 months. In the past, banks have offered interest rates that overcame or at least minimized the impact of inflation. But now, banks are offering only a fraction of 1% of interest. And with inflation hovering around 4 to 5% annually, the value of your money is decreasing at an alarming rate if it's in a checking or savings account. So you may ask yourself, what can I do? What if I told you that I'm getting 9% interest on my money and you can too? I'm investing in stablecoin on BlockFi. A stablecoin is a cryptocurrency that's tied to a fiat currency like the US dollar. Because it's tied to the dollar, it does not fluctuate like Bitcoin, so there's little downside risk. Stablecoins are issued by individual companies, not banks, and because of this, they are not FDIC insured. And a stablecoin is only as good as the company issuing it. The good news is that many of these companies are begging for regulation from the government, and the U.S. Department of Treasury is asking Congress to write legislation to regulate them in the future. So you may ask yourself, how do companies like BlockFi pay so much interest? Just like a bank, BlockFi lends money to institutions and investors, and they pay interest on that money. The main difference is that BlockFi is dealing in cryptocurrency, which allows it to pay much higher rates than banks, at least for now. Keep in mind that since it's not FDIC insured, there's always the risk of loss of principal. However, this same risk exists with stocks or ETFs. Right now, BlockFi is paying 18 times the interest rate that you can get for a bank. So BlockFi is an excellent option to kill inflation. If you're interested in starting a BlockFi account, use my referral code in the description, and you'll get $10 in Bitcoin for the first $100 deposit. Also, if you like this content and want to see more like it, hit the subscribe and like buttons. My videos cover investing and entrepreneurship, and they're posted multiple times a week. So until next time, have a great day, and thank you for watching.